This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, January 12th, 2015. Euro dollar. So we're seeing a bit of a consolidation after the market paused for a breather after breaking to fresh 9-year lows at 117.55 last week. A break below 117.55 will expose the 2005 base, which comes in at 116.40. But daily studies are oversold, with the RSI tracking well below 30, and the market is poised for a short-term bounce. But at the end of the day, the market still is locked within a very well-defined downtrend, with only a break back above the 123 area, which represents the 50-day moving average, to compromise the bearish outlook. Sterling dollar. Cable is also in the process of correcting after recently breaking down to fresh 18-month lows, trading just shy of critical psychological barriers at 150. But again, the market remains locked within a well-defined downtrend here, and any rally should continue to be very well capped into the 154 area ahead of the next major downside extension below 150 and towards the 2013 base, which comes in at 148.15. Dollar yen. Dollar yen continues to consolidate recent gains, with the market recently breaking up to 7-year highs in December at 121.85. Ultimately, any setback should be well supported ahead of the low that we saw back on the 16th of December at 115.55, with only a break below 115.50, 115.55 to compromise the bullish outlook. Euro Swiss. Euro Swiss continues to gravitate back towards the 120 barrier, but is also very well supported ahead of the barrier, and the market looks like it could be wanting to foot in a major base. However, a break and close back above 120.45 would be required to confirm the base and open the door for fresh upside. Inability to take out 20.45 will keep the pressure on the downside, with a focus on a potential test and break of that 120 barrier. Aussie dollar. Aussie dollar is in the process of correcting a little bit after recently stalling out just shy of key psychological barriers at 80, but the market is expected to find a lower top over the coming sessions in favor of a resumption of declines and a resumption of the downtrend back towards and eventually below 80. Ultimately, only back above the 85.40 area of some previous 2014 support, now turned resistance, would compromise the bearish outlook. Dollar CAD. Dollar CAD continues to trade higher to over 5-year highs, with the market recently taking out key resistance in the 1775 area to break above 118 and now focus on next psychological barriers at 120. But again, daily studies are overbought, so there is the possibility for a bit of a short-term pullback. Any setbacks, however, should be very well supported by previous resistance in the 1675 area, with only a break back below the 1560 area to compromise the bullish outlook. Kiwi dollar. Kiwi remains locked in a multi-week consolidation, although the market is locked within a more well-defined longer-term downtrend, and this consolidation is therefore expected to break to the downside, with a break below 76.10 to open the door for the next downside extension into the 72 area further down. Ultimately, only back above 80.35 would compromise the bearish outlook, while any rally should continue to be very well capped in the 78 to 79 area. S&P 500. The S&P 500 recently put in a fresh record high back in late December, with the market stalling just shy of critical psychological barriers at 2100. The recent gains that we've seen are classified as corrective, with the market potentially looking to put in a lower top and carve out a major top and stalling out around the 2070 area ahead of the next downside extension to be confirmed on a break back below the recent lows that we saw in 1990 and then towards 1970 further down. Inability, however, to break down, followed by a break back above 2075, would compromise any topping structure and put the pressure back on the record highs, with a potential push beyond 2100. Gold. Gold continues to be locked between two key levels, 1256 above and 1131 below. A break above 1256 would be required to shift the structure and open the door for more significant gains, while inability to take out 1256 will keep the more medium-term pressure on the downside, suggesting a lower top ahead of the next downside extension back towards and eventually below the 4-year lows at 1131 and potentially towards 1000 further down. That's all for today.